Morning traders, it's Nate with Trade Signals Daily with your morning prep. Today we have the unemployment report coming out pre-market. We have key support levels above and below the market, and we have some key market reports coming out next week. So these are the factors we want to be aware of for today's trading. Let's dig into it. Okay, so the first couple things I want to cover is this current trading range we're in on the S&P 500. This is the Spider ETF, and it tracks the S&P really well. It has really high volume, so I like to use it for some of my longer term charts. Also, it has volume. When I look at the indexes, I can't get the volume, so this is a good chart to use if you want volume, and it's pretty good. Might not have the exact same prices as, say, the futures contract, but the idea is the same. And so we're doing a market prep that will help us trade today and the next week or so, and longer too. So zooming in here, this is the daily chart. I have this range until this is taken out. We're kind of locked in here. So really the value will come from trading in between these two zones. So taking longs down here, shorts up here. Now today we have the unemployment report coming out pre-market. It's actually coming out any minute now. But some of the key levels I'm looking at right now. So we touched the low of this range. I would say a breakout above this high should lead us back up into the highs of the range. And that would again be resistance, so I'd be careful up here. And any move below yesterday's low, or not yesterday's, yesterday was a holiday, Wednesday's low should get us further into this key support zone. So until this area is taken out, which I expect it will be soon, not this week, but next week or the week after, I would say. Good possibility. We have major reports coming out next week, CPI, PPI. Those tend to be big market movers, and it's all related to interest rates and the Fed. So I'm sure there'll be lots of speakers, talking heads talking, but here we just look at the charts. So right now, this is the key factors I'm looking at. Again, just for today, above this high, there's some room here to the upper ends of this range. We do have a double bottom, so yeah, if you can make some profits in this area, I think that should be your easiest trade. As far as if we take out the low, again, we're dealing with a major support zone. You got to be careful of a quick retracement back up. So if we do gap down into this area, that would make it that would give us more room in this value. This is the profit zone here in between the two rectangles. So say we gap down, start turning back up, then I would favor longs again, and they should accelerate above Wednesday's highs. So that's my trades. If we do gap up and we're into this zone, again, nice short to the downside if we turn. So that's what I'm looking at. Again, next week, CPI, PPI, forming this range here is a contraction in volatility, which usually brings about high volatility moves afterwards. So, bigger picture, this is weekly chart. Usually I start from the monthly and work down, but today I'm working from the daily up. Just again, this is 3 weeks inside of this is the Fed rate decision that was about a month ago. Took us out of that small range we had formed at the highs, and basically we've been inside there ever since. Again, around key reports, the high and the low that's made will act as support and resistance until taken out. So again, this was a shock value, and people are still digesting it. Basically, this is digesting the news that came out, and it's taking a while. So what comes after this, nobody really knows. All we know is that likely it'll be a big move, up or down. And if we look at the monthly chart, and if you've listened to any of my videos recently, I've been going over the overbought levels on the monthly chart. So it's something to consider. We've been in a long bull trend here, and these things just don't last forever. So monthly chart, I know we're kind of getting, that's why I don't like starting at the lower levels, because it starts covering up the bars. Yes, last month was a reversal month, made a new high and closed at the lows. So again, if we break out below this low here, I would expect acceleration. And also we have these lows here, slightly lower, two major lows, two monthly lows there. So that will be support until that's taken out. But that is also, that would accelerate things even more to the downside if we do take that out. Probably at least to this level. And then again, we're talking about further out there. The further you look out, further you forecast, the further you try to analyze, it becomes more difficult. But for today, like I said, this is our range, and that's where the value's at. But like I said, if we do start breaking these lows, just to keep that in mind, that there is a lot of potential to the downside, taking that out. And if a monthly pullback is something like this, then we're looking at, this is almost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months of a pullback. And say 600 to 500. So what's that? 10, probably 20%, and 10 months. So anyways, it's just some factors to consider. We could be starting more of this type of market, and we just want to be prepared for that. So again, that is trying to forecast out long, more chances for being wrong. So again, focusing on today's trading, it looks like we are breaking down after the unemployment report. I haven't looked at the numbers, but probably means it was good numbers, and good numbers aren't great for the interest rates. So like I said, though, careful buying down here until we get that turn. So that's what I would say. Here's again, this is the area that we want to be either long from the lows or short from the highs. We're gapping down, so we're going to be coming off these lows if we turn, unless this area is broken here, and not just by a little bit, but we want to see some good movement below this area, and it definitely could happen. The range is increasing here on the volatility, so that's always a possibility. We could get another day like this from the Fed day. Again, we don't know that much. Again, play the safe bet. These two areas, if it breaks below here, yeah, this is a bigger area, and more concern here, more volatility. But until this range is taken out, we're going to be bouncing around in here. And with the major reports coming out next week, I don't see a major move coming until after CPI, PPI next week. Okay, hope this helps. Good luck with your trading, and I will see you next week.